Hello, UOBKN clients and friends. This week, I'd like to make a quick comparison between a speech made this week by Fed Chair Jay Powell and a speech made by one of his predecessors, Alan Greenspan, almost 30 years ago. What Powell said on Tuesday was that U.S. asset values were highly valued. PEs are high, price-to-book ratios are high, etc. The fact that he was bringing up, made people worry, well, maybe he's got to do something about this. Maybe this is really a concern of the Fed. However, the market reaction was that it was not very dramatic. The S&P 500 just pulled back a little bit on those comments. And if you look at it on a weekly basis, the S&P is still 0.7% higher than it was when I spoke to you last week. Things were a little bit different when Alan Greenspan spoke in December of 1996. Alan Greenspan used the phrase irrational exuberance to describe the very buoyant market that was going on during the dot-com era of that type. But nevertheless, the longer-term result might not have been too different because the markets quickly stabilized and went back into their bull mode. So basically, Powell's comment caused a little pullback last night, Tuesday, in the U.S. Well, for this week, we have the PCE inflation number. The economists have been pretty good at predicting these numbers, and so they're expecting month-on-month core inflation to be 0.3%, year-on-year to be about 2.9%. So if we get those numbers, I don't think there's got to be that much change in the market. I do have one observation. If we do have a 0.3 month-on-month number, that would put quarter-on-quarter PCE inflation at something like 2.6, 2.7%. You couple that with a Atlanta Fed saying that the U.S. economy is growing at a 3.3% rate, you're almost up to 6% nominal growth for the U.S. The U.S., which has debt to GDP at over 120%, the debt to GDP ratio actually starts to drop. But at least for the time being, things are not getting worse, and actually they could be getting slightly better. And if there is a government shutdown, it's not necessarily bad for the market. We had one during Trump's first term in office that lasted like nearly a month. And during that time, I think the S&P 500 went up 11%. Anyhow, that gives you my recap for the market. I'll speak to you again next week.